Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going to go over week 19 of our weekly numbers as of today, December 1st, 2024. This is just after Thanksgiving, so I just got back, so happy Thanksgiving. Hope you enjoyed your holidays. And now we're going to get into our numbers. So, our portfolio net worth currently at $294.74, and that's as of today, December 1st, which is Sunday. We have our, you know what, I should do this. I apologize. There we go. Full screen. There we go. That looks better. 294.74. Okay, here we go. Portfolio weekly data. So currently for the week, we're down 0.54%. This week is from November 25th to December 1st. We did have net cash flow coming in of $30 into the portfolio. So that's where you see this large spike up. So that's $30 cash getting deposited into the account. And it buys each individual asset based on their current weighting. We have a market gain over that week of $1.44. So this is week 19 or weekly data for week 19. Our monthly data chart from November 1st to December 1st, we have a net cash flow of $60. So you see the two spikes right here. So you have it on November 6th and November 27th. So two deposits, $30 each, totaling $60. That's where you see the stair steps. We have our money weighted return of 2.16%, positive gain 2.16%, and we have a market gain of $7.26 and no dividends earned during that time period. So this is our monthly data from November 1st to December 1st. Then we have our quarterly data from September 3rd to December 1st. We have a net cash flow of $152. So that's four. You see five. 1, 2, 3, 4, 5. So that's five $30 cash deposits. Remember, every 3 weeks, $30 gets deposited and then it invests into the individual ETFs. So whenever you see that stair step, you see that. And this is over a 3-month period. So $152 over a 3-month period. It's technically 150, but the 250 is usually just cash extra that's market gain in the account gets added in, but it's basically 150. Our money weighted rate of return is 6.61%, so we're up 6.61% for a market gain of $14.02. And the dividends earned is 35 cents. So this is the portfolio quarterly data, again from September 3rd to December 1st, so 3 months worth of data. Now we have our portfolio weekly percentages. Just to quickly go over, our target weightings are for our gold ETF, which is GLD. We have it at 30%. For our dollar ETF, which we have UUP, we have it at 20%. For our bonds ETF, which we have GOVT, we have it at 15%. For our commodities ETF, which we have USCI, we have it at 15%. For our stock ETF, we have RSP at 15%. And for our Bitcoin ETF, we have IBIT at 5%. So those are our target weightings right now. So 30% gold, 20% dollar, 15 bonds, 15 commodities, 15 stocks, and 5 Bitcoin. So for our weekly percentage returns, so this is over a 1 week period, gold down 1.56% for a loss of $1.35. Our US dollar down 1.49% for a loss of 85 cents. Our bonds up 1.28% for a gain of 54 cents. Our commodities down 0.07% for a loss of 3 cents. Our stocks up 1.02% for a gain of 43 cents. Pardon me. Bitcoin down 1.94% for a loss of 29 cents. So this is our weekly percentages. Now we'll do our monthly percentages. So gold down 3.44% for a loss of $2.78. And we'll go over the charts. You'll see gold had a big pullback after the election, so that's a part of that. Making a kind of a reversal. Our dollar up 1.37% for a market gain of 61 cents. Our bonds up 0.57% for a market gain of 26 cents. Our commodities up 4.59% for a market gain of $1.74. Our stocks up 4.78% for a market gain of $1.81. Our Bitcoin up 34.41% for a market gain of $3.93. And Bitcoin had a hell of a run post-election, or I should say leading into the election, and then post-election really ripped. Now our quarterly, so this is over 3-month period, gold up 4.42% for a market gain of $2.72. US dollar up 5.44% for a market gain of $1.80. Bonds down 1.45% for a market loss of 0.71 cents. Commodities up 6.17% for a gain of $1.72. Stocks up 7.76% for a gain of $2.03. And Bitcoin up 70.44% for a gain of $6.16. So you can clearly see which is a big one. Bitcoin going up. And that's, remember, I keep it low because it's so volatile. That's why I keep it low. So big moves like this, you could be up 70%, and there's periods of time where in a 3-month period, Bitcoin will be down 20, 50, 80%. You know, it can have huge drops. So we did have a portfolio transaction for this week. So on November 27th, we had 6 buys. So this is when the cash got deposited into the account. So remember, every 3 weeks, $30 gets deposited into the account. So, and then we just buy the assets based on their weighting. So we bought our USCI, which is our commodities ETF. We bought $4.57 worth. For our GLD gold ETF, we bought $9.34 worth. For our Bitcoin IBIT ETF, we bought $1.22. For our stock ETF RSP, we bought $4.42. For our US dollar ETF UUP, we bought $7.28. And for our bond ETF GOVT, we bought $4.90. So again, this is on November 27th. This was a cash deposit of $30, and we equally distributed it based on the percentages. It says for week 19. Now we have our Illuvium staking dashboard. So as of today, on Sunday, we're up to $60.41. So our price is coming up. I've seen some other coins come up as well. I have no idea why. I think it's just post euphoria of the election. These games are still in early stages, so it's still got a long way to go. But as of right now, the price has been coming up. So we added a stake, which I'm going to show you. So we have another vesting. So we have up to 5 now. So we have a total of 4.97 ILV staked for a current market value of $300.06. So I think this might be the first week that my ILV is higher. Yeah, so our market portfolio is at 294 and the ILV portfolio is 300. So the price has really been coming up kind of quick. So it's starting to creep past it a little bit. And the volatility of it could rip past it depending how quick it can go. But this is our current dashboard. So you see here we have 5 staking now, 5 different vesting schedules. So our first one was staked on July 27th, 2024. It will unlock in 237 days. So that was the original first 1.32 ILV, which at the time of purchase, I spent $100 on that. So at the time of purchase, that's what I got for $100. Our second one was August 24th, 2024, which unlocks in 265 days. Our third is September 25th, 2024, we staked, which unlocks in 298 days. Our fourth is October 25th, 2024, which unlocks in 327 days. And the most recent one I did on November 25th, which I think was like Monday or Tuesday, I forget. And it unlocks in 359 days. So that was 0.74 IV. Now you see here, after the first one, this was $100. So I seeded both accounts, the M1 account, and I seeded the Illuvium account with $100. And then after that, basically doing roughly $40 a month, adding onto it. So this is $100, what it got me at the time. $40, $40, $40, $40. So you can see the difference in how much ILV over time it'll get you. So this was the most right here back in October. It was this when the ILV price was the lowest. I think it was like in the 30s, and now it's shooting back up. It's like the 50s and almost 60s now. So it's I'm not even getting a full token anymore for just that $40 deposit. But either way, you can buy it fractionally, so it's not a big deal. So we're up to 5 stakes now, so 5 vesting schedules. And remember, the more we add on, the more revenue distribution we can get later on. And then when these unlock, we could claim them. We can get our money back, or get our tokens back, I should say. And currently we did not receive any revenue distribution for this week. So week 19, 0 revenue distribution. And this is the, I almost forgot to mention, this is the Illuvium transaction. So it was November 25th. So it was 0.74 ILV. So this is when I purchased it from my Coinbase, and I sent it to the wallet and I staked it. So on November 25th, 0.74 ILV, which at the time I purchased, again, is $40. So it's going to be $40, pretty much just going to keep it the same like that, keep it easy. So this is just the transaction for that. So this last stake right here, so you see at the bottom here, 0.74. So that's what that is, November 25th. So just being transparent, showing you the transactions and everything. So those are our weekly numbers. So now let's get into the charts. So first, as always, we have gold, our biggest position. So you see currently here, oops, damn, this little thing is annoying. I have to do this. I'd like to fix these bars just to make them clean. So you see we're still in this uptrend. You saw this post-election drop right here. That's what I was talking about. I talked about the past couple weeks, and then we had a sharp pullback. Like literally the following week when I did this video, it was like a sharp pullback. And then we have a little bit of a pullback because this was also kind of a sharp move. So right now we're still in the trend. We're still in the trend for gold. So I've been saying it every week since I started this. I have no reason to sell gold yet. You know, until this trend breaks or something breaks, you know, I have no reason to sell this. We're going to keep it at 30% in the meantime. So it's been our largest allocation, the longest in this portfolio the whole time so far, going back to July when we started. So gold, 30%, still doing great. Still think inflation's not going anywhere. So that's where we're at with that. UUP or US dollar. So we did increase it. The previous week we increased it. It used to be 15%, now it's 20%. And bonds used to be 20%, but we reduced it to 15%. So now we're up 15% on, up to 20% on our dollar ETF. So I saw this huge rip right here. So this was end of September, early October, just started ripping. It's starting to barely pull back right now, but we're still kind of going along this trend line here and this red trend line down there. So we're still kind of back above it. My hope is we pull back, maybe tap it and go up, but we'll see what happens. I can't predict the market, but our dollar trend ETF is now still 20%, and we're keeping it at it for right now. So it's kind of got a reversal going. So that's where we're at with our dollar ETF. Our stock ETF, RSPO equal weight, as you can see, it took a bounce off this line and it's still heading up. So we're still doing good on stocks. We did increase that to 15% a few weeks ago. I forget exactly when. I just remember, I think it was around this area because that's right after I did it. It came down and then just like it started coming back up, thankfully. Otherwise, I was gonna have to reduce it back down. But as of right now, we're at 15% on our stock ETF. We're still in this uptrend. You know, there's been a couple times where it's trying to break it, but it hasn't collapsed down yet. It's just kind of broke through. This was August, was it that 5th? Oh yeah, this was that crazy volatile day. This is like that crazy market day right there. But as of right now, we're still going pretty good on our stock ETF. Going to keep it at 15%. If the trend breaks, I might bring it back down to 10%. If it really breaks, like if we're in like a recession type situation, I'm using air quotes because who knows. Then I'll probably bring it down to maybe 5% or something. We'll see how extreme it gets. Commodities been kind of coming up right here. Most recently right here, but nice little come up on commodities, which I like. Again, going back to July 22. Been in over 2 years now. Over 2 years, I've been in a bull trend, been in an uptrend. Now we're coming closer to the top of this trend line. You can see in the past we hit it before and we came down. We kind of hit it around here and we came down. So we kind of come down, dropped off. Now we're starting to come back up. Just like I said in a few previous videos, I don't think inflation's going anywhere, at least not yet. Maybe next year we'll see what happens. Maybe if we do get spending reduction, you know, I believe we're at the point now where I know we're at the point where we're spending more money than what we get in tax revenue. So this is why we're printing money, we're inflating our currency. So we're causing all commodities basically to inflate. So that's why I own commodities. If the government, essentially, I hate to say it, but if they're going to inflate our money away, the net effect is, you know, the price of commodities are going to go up relative to the currency, so the US dollar. So I'm going to own commodities, you know, I'm going to own the thing that's inflating, you know, because that way my portfolio inflates with it and goes up. But this has been, like I said, a 2-year trend in this ETF. So really no reason to change. It's been better than gold if you want to get technical. But gold's had a much better return. But we're keeping our money about 15% into this. Like I said, if inflation reverses, starts going down, a lot of the commodities will start going down, and I probably reduce my position. Right now we have our bond ETF right here. We had this drop off, and I probably held it longer than I should have in that 20% position, because now as I reduce it to 15%, look, there's this like turnaround that's happening right now, which of course would happen. So my timing's never great, but it's not, or I should say, it didn't stay under this bearish trend. It kind of came above it, but we're still not back above this bearish or greenish bullish trend line yet. So we're still kind of underneath it. So we haven't like come back up. So relative to dollar though, because it's coming down at the same time that's coming down, this is coming up. So pardon me again. So they're inverse. But bonds for a long time have been coming down. If you go look on a 5-year chart, you go back here to March 2020 when the pandemic started, you see this big drop off just coming down. So you just see a huge drop. Then you kind of see a bottoming here, and it looks like it's starting to go back up, but it hasn't fully came back up yet. So depending on how it goes, I might reduce that position even more, down to 10%. Who knows? Maybe the dollar could just keep going up, and bonds will go down, and I'll have to reduce my position of bonds. And then of course the last one, IBIT. I gotta do year to date. There we go. So just this huge run up. Here we are, November 5th post election. So just huge run up. So it's already coming up from going September to October, and then post election just boom, right? And we kind of came around like the 100,000 mark. Where I think we're like mid 90s right now. I don't know the exact number, but we're on mid 90s. So, I've always noticed people like big round numbers when they invest. I don't know why. I think it's just simple market philosophy. I think simple minds like simple solutions, But as we're getting to that 100,000, I would think to myself, it's either gonna hit it and come down, or hit it and break out, or it's gonna do like that choppy. Like it's usually one of the three. So far, it kind of hit it, and then it dropped down. You see this red candle right here, and then it kind of came back up, but it still hasn't broken through it. So it looks like it's kind of hitting that choppiness of it. So it's not quite there yet, where it wants to hit it and break through it. So I don't know if we're going to see this much longer. We're in December now, so we're toward the end of the year. And then once it's over, it's 2025, it's a new year, so we'll see what happens. But, going back here, it was going down from March to September. It was in this downtrend, and then it finally started coming out and break out. So Bitcoin's been doing good. I had a 5% position. Like I said, I have to be like ultra bullish on the market and Bitcoin for me to go higher, just because it's so volatile in the portfolio. I think 5% is more than enough. But that's kind of where we're at. Kind of rushed through this a little bit just because it's like Sunday night, and I came back from the family, or visiting my family, Thanksgiving and everything. So hope y'all appreciate it. As always, I'll keep updating every week. Thank you for watching. If you have any questions, comments, or criticisms, let me know. I hope you had a good holiday. Hope you enjoy the rest of the holidays, the rest of the year. Spend time with your family, loved ones, and all that. Thank you very much, and have a good day.